Okay, so trading tip of the week is around trailing stop losses. I don't know if you use these or familiar with them, or even if you're trading, but they're quite useful. Uh, Trailing stops, you're using them to protect profit. So you've got to have some profit in the trade to be able to use a trailing stop properly. And of course, the market, once it's moving in your favor, so it's very difficult to know when to take your profits. And therefore, what you can do is you can use this trailing stop, and then it just makes it an automated technical trade rather than you having to make that decision. Now that you're never going to sell or buy the top or the bottom of the market by using a trading stop, but at least you're protecting profit, and that is a very important thing. And of course, with a trading stop, if you decide to take your profit, you can take it. Just remember to cancel the trading stop. Otherwise, it's still going to be in the market. Now, what is a trading stop? So the trading stop follows the market. So let's imagine I've bought it at 50 and it's up now at 80. So, I've got 30 pips, basis points, ticks, whatever you want to call it, in my trade. So there I could work out where I want to put a stop loss. So yeah, I could manually just raise a stop loss. Or what I can do is put this trailing stop on, and it's like a tracker. So as the market goes more and more in my favor, it's going to drag my stop loss and lock in more and more profit for me. Now, when the market turns, the trailing stop loss remains at its highest or lowest point, depends if it's a buy or a sell order. And what that means is if the market comes down far enough, your trailing stop will get triggered. But quite often you will get a better price than you would have done if you just put in a hard stop somewhere else, just a set stop. And there's no obligation to do that. And also, just make sure that you don't put it too close to the current price, because it's very likely you're going to get stopped out almost immediately if you do. But then again, you don't want it too far away. So you've got to find that happy medium. I suggest you bring up some short time frame candlesticks or whatever chart you use, and look to see, how big are the candles? What's the range been for each 5 minutes over the last hour, say, and then that'll give you a rough idea of perhaps where you should put your trailing stop if you're going to use it. And of course, depends on the size you're trading, that you could have multiple stop losses. You could have stop losses, you could have trailing stops, you can make combinations. Just don't confuse yourself and make sure you understand what you've got in and why you've got it there. But I'll do this from time to time. I'll have maybe 3 or 5 different trailing stops. I'll set some a bit closer, some a bit further away. I'm just trying to give my position the maximum opportunity to produce the best return for me that's possible. And of course, the great thing is it does remove that trading decision of you having to say, I'm going to get out now. And the reason for that sometimes is because, imagine you've bought it and the market's rallied up and you've missed a good price and it starts to come back a little bit. Sometimes when that happens, you're in a situation where you think, oh, if it goes back up there, I will get out, but it keeps coming down. And then, of course, oh, why didn't I take that price just then? And then eventually you don't get out, and you get stopped out. And you don't want that to happen. So a trailing stop is great for that. It takes the decision away from you. Okay, so now we're moving on to technical analysis. Again, just a reminder, on the right axis, so the black numbers are the trend lines, support, resistance levels, just in numbers for you as well. Brown numbers are breakout levels that I think I see, except if the pivot points are on there. So just be careful you don't get confused with that. But the lines are slightly different because the pivot lines do not go all the way to the end of the chart. And the claret numbers are just horizontal levels based on double tops or triple tops or bottoms, something like that. Fibonacci colors are on there as well, if I've placed Fibonacci on there. Okay, so we're going to start with the Dow. Stocks had a really steady week, so ended up positive as well, ended up on the highs of the week. So again, we're just going to have to wait and see what's going to happen. There is a resistance level that's been there for some time, as you can see. And again, if it does pop through there, then we may see some more move and some buying coming in and pushing it higher. But for me at the moment, I'm treating that as a resistance level until it's broken for sure. And then again, below the market, I've managed to find a support level for you. Just remember, these are levels that doesn't guarantee that they're going to be great or good levels even. And they change daily, but this is just to give you a little bit of an insight, an idea of what's going on with trends, where the market's been. It just gives you that sort of, you can visually see it. I tend to look at dailies and 30 minutes more than anything else. So here's the Dow with the 30-minute chart. And here we can see it's up there. I've managed to get that resistance line in above the market and a support line below. The pivots are on there. As you can see, Friday, for most of the morning, they remain below the pivot point, which is a solid blue line. And then during the afternoon, as things, news came out, etc., it all became that bit more positive, and we closed pretty much on the high of the week. Moving on to the S&P, stocks are stocks. They all tend to sort of have that more uniform movements, not necessarily follow each other exactly, but direction-wise generally. So here we've still got that resistance level in there at just over 4,300. Are we going to break that this week? Let's wait and see. And of course, the support level below that. For the 30-minute, we have more support lines here. So I've managed to get 2 more support lines on the S&P and another resistance level there as well. It's a similar sort of thing, it almost got to R2 but didn't quite make it. Now, NASDAQ did get that little bit higher, and it did get to test the sort of this long resistance level that's been there for quite some time. It did pop through. It's even closed a few pips above, but can it hold it when it opens? And that's going to be the question. If it doesn't, then for me, for the moment, it's failed. Obviously, if it opens and then goes above that, then that's going to be a completely different scenario to take on. And then we're looking at the next resistance level for the NASDAQ. Just remember, this is just my views. NASDAQ 30-minute, again, I've put the pivots on with all the 30 minutes at the moment because it's a similar sort of picture here. The NASDAQ didn't get so high up on the 30-minute chart, though, for the pivots. It never got to test R2 or anywhere near that. It broke through R1, which is the first resistance level, which is the red line there. Stayed above it, but closed strong, but not as strong as some of the others. So here's the Russell. So remember, NASDAQ is all about the tech stocks. Russell is about the small and mid cap stocks. Now, the Russell did have a good pop through, sort of what I considered to be a good resistance level. And it's closed above it. It's looking strong. I've got that sort of slight up channel in there now. Again, I've managed to draw a resistance level in there. So it's going to depend where it opens to whether that stays relevant or not. On the 30-minute, I've got a support line on there. The resistance is pretty much where the market closed. And again, it's going to be an interesting week for stocks. Now, pound against the dollar, so cable. Here I've got a support line on. I've got a couple of resistance lines. as I keep saying, I just can't get bullish for the pound. I think the US has got the strongest economy by far, and I think that for the UK, and when we come up to the Euro, Europe as well, have a lot more challenges to face at the moment, mainly because of the Russian war with Ukraine, and how it's impacting inflation. But some inflation was already there. It's just, this has accelerated it and expanded quite dramatically. So, yeah, so, I'm not saying it's going to collapse, but, with these future price caps moving higher for energy, for electricity specifically, then we are going to see inflation move higher. Whether that's going to make the Bank of England react more aggressively or not, we'll just have to wait and see for the moment. So here we are. So it came down on Friday. Sort of first part of the day, it sort of tried to sort of hug the pivot point itself, struggled, and then the dollar was getting stronger, and it pushed the pound down. And then we see it. So it only managed to close just below S2. The euro against the dollar. So again, I've managed to get some resistance and support lines in there. This is the daily. As we can see, again, that the dollar strength came back at the end of the week. And here we can see that on Friday, it did test the pivot point. It couldn't hold the pivot point. I've now got that downtrend resistance line in there. And also not just that, but you're seeing that market just drop off as we went through the day and in the afternoon, but it didn't go through S2. So it closed in between S1 and S2. Now, Bitcoin, for me, it's still performing quite well. It's found a level for the moment, so the longs will be quite happy that it's managed to stay above 20,000. And here we're seeing it sort of about 24.5. Now, one thing to remember is when I do this analysis, I'm analyzing the futures markets. So this is Bitcoin CME futures, not the spot prices that you see on other exchanges like Binance and Coinbase, for example. And that makes an important difference. But trend is trend. So it's just I prefer using the futures because that's what I trade. So here's Bitcoin on the 30-minute. So again, it remained below the pivot point all day. It didn't get that extra little bit of push with the stocks moving up, but it's there. It's established itself. At least it seems to have found its own level for the moment. And here's the Bitcoin versus NASDAQ that I like to show you each week. It has been a little bit more of a loose correlation in the last week or so, I would say. It hasn't been so close to itself. There's a couple of times when one market's moved and the other one hasn't so much. But overall, it's probably, I would say, it's pretty much come back towards the end of the week. But Bitcoin just seems to be a little bit sluggish in both directions at the moment, because obviously there's lots going on in the background with crypto. With the gold daily, again, gold 1800. For me, it's pretty much where it should be at the moment. When it was at that sell-off down below 1700, I just thought that was too much, which was why I was buying call options, and obviously that worked out very, very well for me. I wasn't prepared to take the longs on, but I was prepared to buy call options, and that sort of gave me those natural longs. And of course, now we're up at 1800, but can it progress from there? Again, you just got to sort of think about gold. It's got lots of uses, but it's also used by investors as a risk off, a place, a haven, somewhere to put their capital. when they do not want it in the markets, where they don't want to risk it as heavily. Buying gold is not guaranteed to make money, but 1800, I would say it's probably around about a fair value for the moment. Again, just remember that's my view. And here we are with gold. So resistance is pretty much where it closed on Friday. Support lower down. Again, it sort of managed to pop through the first resistance level, and then it just sort of remained in between R1 and R2. So finally, WTI. At that sell-off, got below 90, down into the 87 sixes, but it's found some support again. There's still that nervousness about energy in general, let alone just oil on its own. And supply and demand are probably fairly balanced at the moment, I would say. Again, pick a level for oil. But if people get nervous about recessions, that's really what started to cause off the sell-off last week and the week before, was the nervousness about a recession on the way. But now it's sort of calmed down a little bit, and it's got back more around sort of supply demand, and of course there's still that nervousness with shortages of gas and just energy in general. And with WTI, here we are, the final one, 30-minute chart. Again, there we go. So for the first half of the day, we was above the pivot. For the second half of the day, we broke through the pivot, and then it got sort of sticky around that S1 level, and that's where it closed. So it's still reasonably priced, $91 and something. But let's wait and see what this week brings. Again, it's just going to depend on how we see inflation, what expectations are. Now we're coming up to, as I say, the Jackson Hole Symposium. Let's wait and see what comes out from that. Listen to what's said when that finishes, and what each of the central bankers have to say, because they will impact the markets for sure. So I hope you've enjoyed that. It's just, again, just to give you an idea. Just remember, everything I go through here are just my views, my personal views, and hopefully it helps you. What I'm trying to do is sort of give you a good start to the week, just fill in some of those gaps for you and just prepare you. Of course, if you want to get deeper into things, we offer a daily newsletter. That includes global news, my views on a daily basis, and fresh chart levels and pivot points. We also provide one-day workshops, and we've got 4 of them coming up this week: Monday, Wednesday, Thursday, Friday, if you're interested. They're cheap, but they are so informative. If you've got any gaps, or you want to improve something, or you want to learn something, then why not reach out to us and find out if any of them are going to cover what you're interested in. We do courses, 1-week courses, so there we can sort of really give your career in trading a kickstart and give it a boost. And then for those that are really serious about trading but haven't almost started, or they want to improve their overall knowledge, deep dive into the theory as well as the practical side, and honing those trading skills, then we do an accredited masterclass for that. Again, reach out to us. We can explain all this and try and discuss with you to see how we can help you the best. Trader mentoring for those guys that are already trading but want to get to the next level and do that time and time again. As I mentioned, we consult to companies, helping them with their hedging, as well as to traders, exchanges, brokers, and such like. We provide lots of educational content all round. If you want to reach out to us, it's info@symaxfintech.com. If you've got any questions that you would like to aim specifically at me, then my email address is chris.tubby@symax-fintech.com. forextrading.com. And thanks for listening, and look forward to seeing you again next week. Best of luck. Have a great week. Bye for now.